Hello, I'm Kim Butler. Today's money myth is that you should prepay your mortgage. So I remember hearing this when I was first in a home and had a mortgage, and it's something that a lot of people think will actually be helpful. But prepaying your mortgage goes against the 7 principles of prosperity, and it goes against the acronym that we like to use for looking at how you should use your money, which is CLUE, C-L-U-E. C stands for control, L stands for liquidity, U stands for use, and E stands for equity. When you think about prepaying your mortgage, you have lost control of those dollars, whether it's $100 a month or an extra $1,000 a year, or trying to make bi-weekly payments, or trying to make 13 payments a year instead of 12. However you want to look at it, prepaying your mortgage loses control of dollars. Those dollars then also are not liquid because they're inside your home. And yes, you are building something called home equity, but home equity is not liquid either because you have to ask a bank to use it. So we've covered the C for control, the L for liquidity. What about use? We just said that you have to ask a bank to use it. Now, home equity lines of credits are common financial instruments, but the bank controls them. You don't actually control your home equity line of credit, and while you can use it for whatever you like, the bank can take it away. And then we have this E for equity. And clearly, if you are prepaying your mortgage, you're building something called home equity. But I have a challenge for you. The question is, if you have 2 homes and they're side by side in a neighborhood that's growing in value, does the home with a prepaid mortgage grow faster than a home with just a regular paid mortgage? In other words, does the home that you're building equity in improve in any way its value or the increased value? And the answer is no. So when we look for something that acts like equity, we want something that we can control and something that we can actually make use of. So the money myth, prepaying your mortgage, is truly a myth. Prepaying your mortgage is not a good strategy. It's not an efficient way to build wealth in any form, and it's not something that is helpful to you in the control, liquidity, use, and equity of your dollars. So what do you do with the money that you want to use to prepay your mortgage? You save it. And go back to that CLUE acronym. Save it where you have control and it is liquid and you can use it for other things. And yes, where it acts like equity, but the concept of equity is just simply stating that you can borrow against it. And there's lots of things that you can borrow against. It could be a regular savings account. It could be a CD. It could be life insurance cash value. It could be a variety of things that you can still control that are still liquid that you can use for whatever you want. Some people might say that you should invest those dollars. But typically we're talking about $100 a month, maybe $500 or even $1,000 a month. You can't really find good investments for monthly contributions, but you can find good savings. So when you want to prepay your mortgage, put the money in savings instead. And then down the road, you can use that savings to help you make mortgage payments if you need to, or possibly even pay it off if that truly is your objective in the future. One additional thing to think about when you are interested in prepaying your mortgage is the interest rates. A typical mortgage is maybe 3-4%. Remember, that's tax deductible. There are savings environments out there that can earn more than 3 or 4%. So you want to seek those out. One example is whole life insurance cash value, and you might find other savings environments where the interest rate is the same or even better on your savings account than it is on your mortgage. So prepaying your mortgage truly is a myth because you can put that money in a savings account or other places where the interest rate on it is higher than the mortgage, especially after your tax deduction. So if you would like some more information, go to partnersforprosperity.com.